Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about CAMPBELL CO. Annual Report. The Campbell's Company offers a diverse range of products and services across two main segments, meals and beverages and snacks. Under the meals and beverages segment, the company provides various food and beverage products such as soups, broths, pasta sauces, juices, and frozen in trays. These products are sold through retail chains, mass discounters, club stores, convenience stores, dollar stores, e-commerce platforms, and other establishments. The snacks segment retails a variety of snack foods including cookies, crackers, fresh bakery products, potato chips, pretzels, and other snacking products. This segment also operates in Latin America through retail business. The company sells its products through various channels, including independent contractor distributors, making it a leading player in the food and beverage industry. The significant drop in Campbell Soup Company's (CPB) stock price over the past year can be attributed to several key factors. Firstly, weak organic sales and reliance on acquisitions have raised concerns about the company's core business growth. The snacks division has been a consistent drag on overall performance, with declining sales of key brands like Goldfish crackers and Snyder's of Hanover pretzels. Additionally, persistent cost inflation and margin pressures have negatively impacted profitability, leading to adjusted gross profit margin declines in both the second and third quarters of fiscal 2025. The company's muted and lowered financial guidance has also contributed to investor caution, with revised net sales growth projections and adjusted earnings per share (EPS) guidance. The CEO transition in December 2024, coupled with disappointing quarterly results, led to a further decline in stock price. Analyst downgrades and price target reductions have also been a factor, citing concerns over the struggling snacks business, volume challenges, and increasing costs. Finally, the company's admission of liability for Clean Water Act violations has likely contributed to negative investor sentiment. These combined factors have resulted in a challenging year for Campbell Soup Company's stock performance, with a significant drop of over 31.08% in the past year. The primary drivers of revenue growth or decline can be summarized into several key factors. On the growth side, the acquisition of Sovos brands and an additional week in 2025 contributed to increased revenue. The meals and beverages segment also experienced growth due to higher sales from beverages and snacks. However, there were several drivers that led to a decline in revenue. Disruptions to the supply chain, volatility in commodity prices, and failure to mitigate or manage external events, such as natural disasters and pandemics, negatively impacted revenue. Additionally, the inability to complete or realize benefits from acquisitions and divestitures, loss of intellectual property rights, and competitive pressure also contributed to revenue decline. Other factors that affected revenue growth include seasonality, with demand for soup products peaking during fall and winter months, and capital expenditures, which included network optimization and information technology projects. Environmental compliance costs were also estimated at approximately $41 million in 2026. Net income and profit margins. A shift in fortune, the financial performance of the Campbell's Company has undergone significant changes over the past few years. Initially, net income increased by $120 million from 2023 to 2024, driven by growth in sales and market share. However, this trend was short-lived, as net income decreased by $35 million from 2024 to 2025. Profit margins also experienced a decline. The gross profit margin dropped by 0.4% from 30.8% in 2024 to 30.4% in 2025, primarily due to increased costs from labor shortages and cost inflation. Additionally, the net earnings attributable to the company decreased significantly, with a profit margin of 9.2% in 2023, plummeting to 5.9% in both 2024 and 2025. The reasons behind these changes are multifaceted. Labor shortages, reduced competitiveness, and decreased sales have all contributed to the decline in net income and profit margins. Furthermore, cost inflation and supply chain costs have negatively impacted gross profit margin. However, acquisition-related benefits did provide a temporary boost to gross profit margin in 2025. Overall, the Campbell's Company has faced significant challenges in recent years, resulting in a decline in net income and profit margins. Addressing these issues will be crucial for the company's future success. The company is indeed generating positive operating cash flow. The financial summary clearly states this, and the data provided on page 29 and page 43 supports this assertion. In 2025, the company generated $1.131 billion in cash flows from operations, indicating a strong ability to produce cash from its core business activities. This trend is consistent with previous years, as seen in the net cash provided by operating activities for 2024, $1,185 million, and 2023, $1,143 million. The company's financial performance was mixed across its segments and regions. The snacks segment struggled due to underperformance in various areas, including the Pop Secret popcorn business and impairment charges for Late July and Snyder's of Hanover trademarks. In contrast, the meals and beverages segment showed some resilience despite incurring restructuring charges. However, it is worth noting that this segment also demonstrated relatively high pre-tax costs, suggesting that its performance was not entirely strong. Management's outlook and strategy. In its financial summary, management highlights several key areas of focus for the company. Firstly, it expects significant cost pressures in 2026 due to tariffs, necessitating a reduction in costs through various initiatives. To achieve this, the company plans to build a strong leadership team, drive growth, innovation, and sustainability. The company aims to deliver profitable growth by accelerating its model and focusing on customer satisfaction. It also anticipates generating annual ongoing savings of $375 million by 2028 from current initiatives. Furthermore, management is committed to optimizing working capital requirements through improved terms with suppliers. To support short-term liquidity needs, the company will continue to access commercial paper markets, bank credit lines, and utilize cash flows from operations. Management believes that these sources of financing will be adequate to meet future requirements. Ultimately, the company's strategy centers on innovation-driven growth and sustainability, positioning it for long-term success. The company has made several strategic moves through acquisitions and divestitures in recent years. Acquisitions include the purchase of Sovos Brands, Inc., for $2.899 billion in March 2024, as well as additional funding for Sovos Brands under a $2 billion credit agreement in the same year. On the other hand, the company has also divested several businesses to focus on core operations. These include the sale of its Emerald Nuts business in May 2023, Pop Secret popcorn business in August 2024, and Noosa yogurt business in February 2025. The company has demonstrated a commitment to returning value to its shareholders through both dividend payments and share buybacks. In the past year, it paid out $459 million in dividends and also bought back 1.303 million shares for $62 million. This dual approach reflects the company's focus on rewarding investors while also maintaining control over its capital structure. But concerns about inventory buildup and supply chain disruption are evident in the financial summary. Inventory levels peaked during late fall but declined during winter and spring, indicating a potential issue with managing stockpiles. Furthermore, there is uncertainty about raw material availability, including key ingredients such as tomatoes, grains, and dairy products. Supply chain disruptions could have severe consequences for the business, including increased costs for transportation, energy, and raw materials due to geopolitical conflicts. Tariffs on certain imports have also resulted in higher costs. The company has taken steps to mitigate these risks through commodity futures contracts, but the potential for supply chain disruption remains a concern. That concludes the financial summary for Campbell Co. Feel free to comment below, and I will be happy to answer them when possible.